For a bulk commodity project, logistics can be just as important as the resource itself, because how you move product can directly shape costs, margins, and market reach. Today, we're looking at Atlas Salt's new MOU with CN to develop rail logistics for the Great Atlantic Salt Project, and what it could mean for the project's economics and future growth. I'm joined today by Nolan Peterson, CEO of Atlas Salt. Nolan, welcome back to the watch list.
Thanks for having me, Ricky. Always great to be here.
It's a pleasure to have you, as always. So tell us, Nolan, Atlas Salt has entered an MOU with CN to develop rail logistics for the Great Atlantic Salt Project. How could that help reduce delivered costs, improve project economics, and expand the addressable market for Great Atlantic?
Yeah, so it all goes back to what was originally planned in our feasibility study, which we published last year. In our model, we distributed salt from our port, from the port that's near our site, to a mainland port on the east coast of the US or in Canada. And then from there, we distribute it by truck. All of that salt, the last mile shipping, whether it was 1 mile away, 100 miles away, or 200 miles away, was shipped via truck. Very costly, very expensive. In the ensuing year, we've done additional work, as we always have been, to try to optimize our project, see what the economic potential is. And we realized quite easily or quite early that we could potentially move a lot of that trucking to rail. And rail is significantly cheaper than trucking. And it allows us, therefore, to use that margin savings to also go further inland. So we have more potential markets we can target at a higher profitability as well, and or lower cost, I should say, which allows us to operate at a higher profitability. So it's early stages for the overall understanding of that, and that's why we've entered into this arrangement with CN. They actually kind of came to the same conclusion on their side and reached out to us independently and said, we want to be talking to Atlas Salt about the potential to move our product on their rail lines. And we're happy to be in a relationship with such a large company in Canada, a great institution in the Canadian investment landscape.
Great stuff. But for large-scale mining projects like this one, infrastructure partnerships that you just mentioned there can be a major step in moving from development planning toward commercial readiness. What are Atlas Salt's key next steps, and what milestones should investors be watching for from this point?
Yeah, on this point, we keep an eye out for additional news on optimization of the project, how that affects economics, potentially adjusting the economics in an upward manner for our project as we evaluate the different scenarios. And then this all goes into feeding into our lending and financing strategy, which is acquiring the support necessary to build the project, arrange the financing for it. Any additional cash makes that less risky for lenders and investors, more profitable, and it is overall better for the project. So keep an eye out on that front, and this work will support that as well.
So this sounds like a project where logistics, cost efficiency, and market access are becoming increasingly central to the investment story as Atlas Salt advances Great Atlantic toward development. Thank you so much for your time today, Nolan.
Thank you, Ricky.
Once again, that is Nolan Peterson, CEO of Atlas Salt. For more information on the Great Atlantic Salt Project, visit atlassalt.com. That's all for this episode of The Watch List. I'm Ricky Lee. Make good choices today.